US share markets made fairly big declines last week. In fact, the S&P 500 lost 5% across the week. There were two main reasons for these big declines. The first came out of the US, where President Obama is getting pretty tough on the US banking sector. This is likely to mean slower earnings growth for that industry. The second came out of China, where their economy has grown by 10.7% in the December quarter. This is a little bit fast for their economy and is likely to mean that the government will need to pull back on the reins. The key question now is what impact this will have on the global economy, but also for New Zealand's food exports. With global equity markets moving lower last week, the New Zealand dollar has also made some fairly sizable falls. We have tracked back through the 71 cent barrier and trading just shy of this mark on Monday morning. It is likely we will trade in a fairly narrow range this week until markets await what will happen with the official cash rate on Thursday. I don't expect to see any change in the official cash rate at this announcement, although central bank speak will once again be fairly important. Inflation numbers out last week were lower than expected, and this has meant that markets are now not expecting to see any big changes until middle of 2010. Despite this, I believe there will be a change in April of this year. The tough weather conditions is really having an effect on the US beef industry. Prices have surged over the past week and are well above what they are usually at this time of year. However, slaughter levels have begun to increase, and this will likely take the sting out of the market in time. There is still some concern at the consumer part of the market. Last week, Walmart closed 10 of its Sam's Club stores as the food sector really suffers. Locally, scheduled prices have been fairly flat, and all indications are that they will remain this way in the short term.